was a really big move, I always try to post if it was a good trade, because I know the next time, like, all right, I saw it well, I traded it well, I want to be able to have that ticker bank, memory.
How does that give you edge?
It's
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be the Trader. Today is going to be a great day because we're going into shared screen mode with my man Nate Michaud from Investors Underground. He's going to be talking about the advantages of understanding why you should be tracking previous moves, taking snapshots of all charts, having a memory or a bank for them, and how they can benefit you for future plays. So Nate, welcome back, brother.
Thanks for having me.
Absolutely, man. So I'd love to dive into this topic with you. So go ahead and take it away.
Yeah, for me, I'm more of a visual learner.
Yeah.
So I know a lot of people do a lot of back testing, stats, all this kind of stuff. But for me, I like to go back, and I'm very good at, where have I seen this before? And so anytime that I can see some sort of pattern that is setting up again that I've seen before, I go back and look at the chart and see sort of what I can learn from it. And one of the things that I do a lot, especially on the day-to-day, is I try to relate a current move in the market to something that has happened before. And a recent move that we had was on AMOD. And one of the first things that I said is this thing really reminds me of AIFF. And AIFF, unfortunately, was a trade that I did not partake in. And I think it went 3 to, 16, 17, 18 bucks, something like that.
Okay.
But in any case, I typically look for basically support lines, resistance lines, and I start to put them on the chart. Then that way, as the days kind of unfold and you're a week later, if it starts to pop back up on your radar, your lines are already there. You already know that, all right, there was already, a demand area here or a supply area here.
Right.
When that supply becomes a demand zone, that's when I want to start to pay attention. A lot of people anticipate that, and, sometimes it will work. But a lot of times that might be, the stuff. It might run right into that supply zone and then flush right back down, and you end up, with a failed breakout. So what I want to do is see, or at least be proven right, be proven that, these levels are starting to stick, they're starting to build, and then it's starting that secondary move.
What I've noticed is, I've been following you for a long time, and I notice you post all the time, just different charts, and you always mention like, this looks like this looks like that. Is that just something that's easy for you to do? Like, how long have you been tracking for to where, it became second nature for you? And because it seems like you just explained, you're pulling previous charts and just seeing how they line up with the current action.
Yeah, like I said, I'm a visual learner, so I can remember these things, and I can go back years and remember something that happened. But if I read a page in a book, I can't remember what I read a minute ago. So for me, I just I can go back prior moves, line them up, and on like X, Twitter, I always try to post. Like if it was a really big move, I always try to post if it was a good trade. Because I know the next time, like, all right, I saw it well, I traded it well, I want to be able to have that ticker bank, memory. And instead of doing like a private Evernote or something like that, it's all public. So anytime you go search my name with a prior ticker, click media, you can probably see the last 3 or 4 times that it's run, see its personality. And, today for example, it was MGOL or MLGO or whatever. And it literally had a carbon copy of the move that it had just, I think, last November or maybe like 6 months ago, something like that. And it's not extending to the same level, but it's the same kind of move, same trap, goes up, pulls back again, traps again, and blows all the shorts out that thought that last move was it.
How does that give you edge?
It more so gives you the pause, it gives you a little bit of a pause, like, hey, this is acting the same way as last time. So it's not one of those ones that you want to step in front of.
Comes with shorting.
Yeah, there's been years and years of stepping in front of moves and not, it doesn't always work out so well.
Yeah.
So over the last really probably 3 to 5 years, I've been very focused on just patient, let everybody else blow out first. Let them give you that information, let it pull back. And once it puts in a lower high, then at least you have, a risk that you can risk off of. But just overall, I mean, you could nail 8, 9 out of 10 front side moves, but it's that one, that takes it away. Just like after hours, playing earnings, things like that. You might nail a bunch of them, but it's that one and it's gone. So for me, I just kind of avoided the front side for the most part.
I want to take a couple of seconds to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for short sellers, and I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. And Forbes Advisor did an exhaustive research on day trading brokers, and Cobra Trading was the only broker awarded in 2 categories, one of them being customer service. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. Look, I've experienced many different brokers, and it's why I choose to use them every single day, and I'm proud to have them as our sponsor. Sign up now by using the link below, and Cobra Trading will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. Now let's get back to the show. Can you show here with the screen share on how you utilize or how you compare the charts, if you will?
Yeah, so AIFF, this was the first move on the start of what became a much bigger move. A lot of times there's a first day that has volume, then it consolidates for a few days, and then sometimes it's day 2, 3, or it could be a week or 2 later. But for me, I usually consider that sort of the transitional day where all the bag holders that wanted to sell got out, all the shorts came in, faded off, and it just starts to absorb over the next couple weeks, and then it's set up for round 2. Everybody relates it back to the first move because it easily faded right back down, so they're like, this is easy money. But I focus on the levels that are holding. So for example, this was the first move, in you can see the 3 support, then 380s and 4s kind of acts as resistance throughout the day. Those lines go on my chart, and you can see later on, the second time that it starts to move, you can see how 380s and 4s start to build. It breaks through the 380s, comes back, breaks through the 4, comes back and bases at 4. So now that resistance, the resistance from the first move, ends up becoming the support. And at that point, you can start to have more of a, use an imagination on how far it can go, especially in small cap land. A little bit kind of zooming in, you can see almost to the T. And these are the same lines from the original
one? Okay.
Original move.
This is future now.
Yeah, this is the next run. And you can kind of see where it was basing at 3. And you can see all the way right around 830, it basically dips and then rips right off that 380. And that's what I look for, because most people are assuming it's going to run into resistance, 380s or 4s, and then just flush off. But the dip and the rip candle is very telling, because that's when, I'm sure you've been there a million times, and it's like, that was it. And then it's all of a sudden it's 30 cents, 40 cents higher. And then you can see the same thing where once again, it's sort of fading into VWAP, flushes, and it holds that 4 and swipes right back up. So once again, it's kind of baiting shorts in there and then swiping back up. For me, I'm big on confirmation. A lot of people, including myself for many years, you try to anticipate that reversal, that fade. But for me, I'd rather just let it crack and then come back and prove. And recent examples, SMCI, if you try to, or even HIMS, HIMS, trying to anticipate that reversal, it's 1 red candle and then it's $3 the next way. 1 red candle, $3 the next way. And it's very easy to step in front of stuff and get seriously hurt, even on starters. And so, again, you can kind of see it starting to firm up and break out, and you can see what type of move that was. This is the daily chart. You can see the original move. Then you can see the move that really squeezed shorts. And this was not a huge trade or anything like that for me, but getting back to what you were saying, it kind of goes in the ticker bank. So I've seen this setup before, and if I see it again, I know how to recognize it and react.
It doesn't have to be on this specific ticker, right? It could be a different one.
The next ticker. Okay. So the point here was this AMOD came up. I'm familiar with it from the first day. The first day that I had traded it, I had put the 260 and 320 lines. And kind of zooming in, how did I identify those levels? You can sort of see the support at the 260 level. You can see the support at 320s. Okay, trade's done, whatever. Two weeks later, it starts to come back up on radar. And this is actually maybe a week later or so. You can see that it's still reacting at the 320s and reacting at the 260s. But then we had the big move. And so it had news this next morning. And this, I think, was the 17th or so of February. And what I want to focus on is how it held the 260s, kind of goes back up the same way, checks in with 260s. And then comes back 320s and consolidates, dips and rips at 320s, and then away it went. Same concept, different ticker, same result. And you can kind of see how it took off from there. So for me, with my own trades, you can kind of see, where I'm calling it out, that it basically, ideally it traps. And I think somewhere right here, I am not crazy bulled up on AMOD until proven, but if 260s builds and then 320s, it's the same chart of how AIFF started. So for me, it's visual recognition of a prior move.
Yep.
It's doing the same exact thing. And then over that 320 level, that's when I want to get excited, and that's when things start to open up.
Do you mean when you say like it's doing the same thing as AIFF, as in reclaiming levels?
Correct.
Okay.
So again, you've plotted those levels from the first move,
Right.
and now we're back on the second, the second PR, the second PR campaign, or whatever you
Can
want
this
to call
happen
it.
within the next day of the first day, or is normally you prefer like time between the moves? You know what I'm saying? Like,
So you can see the two here. This is sometimes it could be within like a T+1 move, which
Okay.
is, it might be the buy-in or the second day after that, or it could be weeks later.
okay.
But it's that transitional day. Lots of new buyers come in, soak. Anybody that was maybe bag holding sells, they get sick of it, and then it's round two. And so again, you can kind of see very similar setup on the daily. It's not always going to be exact,
Right.
but using the levels that you took from the first move and applying it to the second move. And you can see how I traded it, and it starts to come in. The first reason that I got excited about it was because it ramps up, it rejects 260s. You should assume that. You can see the wick slammed right down, but then it flushed down,
Yep.
and it did a dip and rip right back over VWAP. So right then, I know if I'm short, I'm like, oh, this
Not feeling good.
Yeah, not feeling good. So that's when I want to start to get long. And so then I did start to get long, and then as 260 started to confirm, I added a little bit more, anticipating into that 320 level. And then as it ramps, you never really know how high it's going to go.
Right.
I want to assume that it's just going to swipe through 320 and
Right.
sit back. So I go ahead and lock some in, and then let the rest ride. And obviously we got a nice circuit halt up, and ended up moving on the rest. But point is using that AIFF
Right.
trade to sort of anticipate how this one may play out,
play
because
out
it
as
was
well.
same tape, same type of setup.
Now, because it happened so recently, are you thinking, hot sector, is that why as well? Like stocks are moving? Or if this just came out of the blue and AIFF happened like last year, are you considering that a different type of like momentum play? Does that make sense?
Yeah.
It's like
I mean,
further away.
you definitely have sector plays,
Yep.
like, quantum and RGTI, and same kind of concept. The
Okay.
RGTI has been, I just like 1160, 1180, 12, like there's certain levels that every single time it hits, it might clear out, sit back down, base at the next level, go back up. And it's just kind of like playing ping pong between those levels. So if it's a day where you don't have an A+ setup and you're just looking for an opportunity, in the market, for me, I'm scrolling through charts and I see it coming up to a key level that I had already put on the chart. And I'm like, all right, this level matters. And then I get interested. And there's been a lot of times that we've been able to use those same levels. I know we were focused on the long side, but
we were.
As I like kind of focus on like what am I really good at and where do you make the most most amount of money, because one of my goals over the last year has been to really step out of like the day-to-day of pressing buttons, and it's very hard to do. It's been a crazy hard transition to just trade A+, just because I'm so used to, I see that setting up and like I want to trade it. But if I were to say what is the best way to spend my time, what is the best type of setup, it's when you've had situations where things are starting to squeeze, whether it's into a catalyst, such as DJT going into the election, or anything like that, and then most recently SMCI coming into the catalyst of are they going to file by their deadline or not. And it's very similar types of setups. A lot of times you'll have like a 15% move, another 15% move, and usually that third day, it's either that day or the next day. And a lot of times the third day, everybody's anticipating that trade.
They are.
Right? So it does happen, but most people, including myself on DJT, you absolutely crush it. And then you start to rescale back in, and it goes all the way back up, V-shaped recovery, right?
Yeah.
So that was something that I was very cautious on SMCI, kind of learning from DJT. The first day, everybody's doing the same thing. It's very obvious. It's going to gap up, para, short, and recover. And then you get usually the bleed out the next day, if that's what happens?
You know, it's interesting. If we can go back to the long trade real quick on, and just have one last question for you before we wrap this up. And that's, I'm sure people see this and they just want to know, like, how did you manage your risk along the way? Because, you know, you see, as you mentioned earlier, I like to add when it's working.
Yep.
So like, how does that like, are you prepared for that? Like, how do you think about adding in terms of like risk and so forth?
If you zoom in, you can see. So like I said, I don't want to anticipate. A lot of people anticipate stuff and a lot of times it fails.
Yeah.
So as it started to slow, you can see I actually took some off. It's a little blurry, but you can see I took some off, and then we had that dip and rip candle, which once again, like, all right, it's this, if I was short, I'm in trouble. So then I started to rescale back in and anticipate that 320. If 320 stuffed, you'd see that same red candle get back down to a typical size. And then
how do you, so you mix psychology along with the actual previous levels that have worked before?
Yeah, I mean, I've been on the wrong side a lot. So what
you remember what it feels like
in this situation? And so you kind of like use the times that you've been stuck or the times that you've stepped in front of stuff, and what would I be doing on the other side of this trade? And a lot of times for my long trades, it's just me simply knowing that I don't want to short yet. And it's very difficult to get long. It's harder for me anyway to get long, but there's a lot more money on the long side for sure.
Well, look, Nate, I know people are going to want to learn more and find out more about you if they don't know already. So could you tell them real quick how they can find out more?
X, Investors Live, or investorsunderground.com.
Perfect. Well, Nate, thanks for being here, my man.
You bet.
Appreciate it. Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.